All right. So I want to cover this topic, the monthly apex, or basically just the extreme of the month. So the point in which the month goes from trending upwards to reversing. So it's basically just in terms of normal price action, at what point do we form the extreme? So we're trending up or we're in a push up, an impulse move up. At what point do we actually form this peak here to then make the retracement and then continue up? So at what point do we form the low of the month, etc. So it's the same as normal price action. Uh, push up, push down, push up, push down. So impulse move up, retracement. This would be the impulse move down, retracement, impulse move down, retracement, and then we have a shift in structure. So it's basically just trying to identify these areas here. And then we'll talk through the importance of identifying them as well. So what we want to do is train our eye to figure out what do they look like. And we can do that on the lower time frames. But for this example, we're going to stick to the daily. So what we're intending to do is figure out that when the month opens, we're inside the previous month's high and low. So these are now the two areas that we have our eyes on. I'm going to change this to a box. Give me a second. So, so this is our previous month's range, our high and low, and then we open up here. So once we're here, we're either going to attack the top of the range or the bottom of the range. So what we can see from the previous month is we're made an impulse move down, retracement inside. So what we can anticipate, we don't know which way it's going to go, but once we start to head down, we can then anticipate, okay, this low is what's going to be attacked next. So once we actually breach out of the previous month's range, we can say this is now in play. So we're now paying attention. Okay, so what happens here? We will either continue trending to the downside or this will be a false break. So we can see here in this instance, this is actually a false break. So what that tells us now is price went out, didn't want to sustain down here. So there was more buyers and it was a false break. So because this was a false break, what we can look now is, okay, so where is the monthly extreme? And so for me, I'm looking at the last down move before the up move. So what I would do is I would extend this out here. So this candle here now becomes our reference point. So this is now our potential low of month locked in. So we've gotten down, failed, pulled back inside. So now this becomes our reference point. So now once we've broken structure here, in my head, I'm thinking, okay, now we are bullish. So now what I'm looking for is bearish candles to take buys from. So that's the reason that we're doing this. It's basically identifying where the extreme is. Once we have the extreme locked in, we can then look to counter trend candles as signal days, as opportunities to actually get in the market. So for instance, here, this month then, so it breaks a high and then it pulls back. New month opens up and we're inside of the previous month's range. So we're inside of the previous month's high and low. And we have this as a reference point. So once we then go 1, 2, 3 closes into this area here, this is now a potential area where we can have a reaction from. And then once we get the reaction, boom, this is now our potential low of month locked in. So then this area here becomes our new potential low of month. So now from here, we're looking for counter trend days. So instead of trying to buy up high, what we want to do is we have our thesis now that the low is locked in. because we traded into the previous month's low and had a reaction. So now we're looking at these days here. So the days where price actually we're bullish, we're looking at the bearish days. So once we get one, two, three bearish closes in a row, that's then prime opportunity for a explosive move the next day. So anytime we can identify the potential high or low of the month locked in, it's golden because from there we can then we have our bias taken care of. So what we're looking for then is counter trend candles. So here we have this whole area up here. Price kept trading into this area and failing. So we have a new month that opens. So a new month, beginning of a new timing cycle. This is like the start of a new narrative. So what is this month going to do? So we push up into this area and fail. So inside the previous month's range. This is the high, this is the low. We can extend it out. Inside the previous month's range, and then we boom, we attack the top range in and fail. So now we've broken out of the range, and if we're going to continue, we should sustain this to continue upwards. If we don't do that, we fail. So because we've broken out of the previous month's range and failed, this now becomes our point of reference. So we're looking at this area here is the potential high of the month. So we're into the second week. So week 1 and 2 eat up top, and then what we can anticipate then is false break 3-4, the expansion down. So what we're looking for then, once this gets locked in and we engulf, we're looking for counter trend days because they can be potential continuations. So here we have a counter trend day followed by an inside bar. So that's 2 signal days in a row. And then we can see explosive move the next day. So then when the new month opens up, we've broken out of the previous month's range. And then we have 1, 2, 3 candles and then a fourth one at the beginning of the month. So this month opens and immediately everybody's buying. But because we have the high locked in from the previous month, these are now counter trend candles. So we're anticipating the continuation. So we can use these candles as our reference point to actually know that to look for an entries and we can actually sell high as opposed to trying to face the move down here, be selling, getting chopped up, etc. This month then breaks out of the previous month's range and goes sideways. So when we're in this area here, we don't know what's happening. Then we break up and continue. So once we put in the low, we have this area here, and then we break out, and if it's going to fail, it'll continue down. But it doesn't, it breaks out and it continues. So this area here becomes our new reference point. So this is now our apex locked in, or monthly extreme. Casey Burke would call it the first red day, or first green day, because it's a buy. So this would be our first green day here. And then we go sideways for a few days before continuing. So now any counter trend day, so this day here is a potential signal day for an explosive move the next day. And you can see here after this, boom, explosive move. So basically what we want to do is look to where we can see monthly extremes being locked in. Once it's a confirmed thesis, our bias is then confirmed. So then we can anticipate counter trend days as signal days. And then, so here, basically then these opportunities or these candles, these closures become opportunities for continuations. So instead of trying to chase the move and trying to find a buy here, we can wait for one, two, three counter trend candles, then take a continuation. And this bias remains until we put in a new extreme. So here, this is a potential high of month. This could be, so week one, we go up. Two, we eat into that. This can be a potential high of month, but then we proceed to go higher. So our bias is now still long, and we can just extend this area out. And price just eats into that before going up once more. And we put in a middle structure. And then we have the apex locked in. So the first red day. And then from here, we're looking to the counter trend candle. So we're looking for any up candle because we're now moving downward. So any candle that closes in breakout long means that they're getting volume sucked in the opposite direction. So we can anticipate a explosive move the next day. So trend candle, explosive move the next day. See daisies. So here we can just see that the importance of the monthly range. So we have the low of the month, high of the month. This is our monthly range. We have eaten into this area here. So the month opens up, immediately goes down. So the beginning of a new narrative. Month opens, everybody's shorting. We're shorting into a previous month's low, and that fails. So this is now our apex. First green day, our bias is now long. So when this month opens up and we go down immediately to the 50% level of the previous range, fail, our bias is now long, and we can then just look for longs for the take the expansion up. Um, and this expansion actually then, so this month retraces to the 50% level, which up. This month retraces to the extreme of the range, and then we complete a full range expansion the next month. So now, catching up with live time, so we can see here, when this month opens, we're still inside the previous month's range. We go down, put in an extreme. We don't know what's the extreme until this area here holds. So now we are bullish. So we open up inside the previous month's range. We attack the top of the previous month's range and pull back. So at this point now, we don't know whether we're going to be going reversing to the other side of the range or we're going to continue. So we wait. It shows us that it has intent to go higher. This then, we can get rid of this. This is our new monthly range. And we break out of the top of the month and then go 1, 2, 3 down to the 50% level. Boom. And we've just completed the expansion. So now we have broken out of the previous month's range and actually the high of the year as well. We have one trading day left in the month. Two trading days left in the month. No, one. Tomorrow is the last trading day of the month. NFP is Friday, so tomorrow is Thursday. So we've got one, two, three lower closes at the high of the month. So now what we want to wait and see is, okay, are we actually going to be breaking out and failing, or is this going to be the beginning of a reversal? So we've had 1, 2, 3 months up now. So the market moves in threes. We're now at the high of the year, putting in a potential high of the year. So we don't know. What we want to do is wait and see how the remaining of the month closes and the first few candles of the new month. And that will then give us a reference point that to see whether this actually is the apex. And this becomes our new reference point. Then continue looking for sells. If that is the case, then we will look for any big bullish days, closing and breakout, we'll actually sell into. Cool. So just summarizing, the previous month's range is a crucial piece of information, and we're basically using the previous month to see, okay, where are we in terms of the previous month? Are we in the upper half? Are we in the lower half? Are we inside? Have we broken out yet? We wait to see, do we put in a, basically just looking at structure. So here's the previous month's range. We break out and then we pull back in. We pull back inside to this area here to continue up. And here we actually break structure. So we're previous month's range. We immediately at the beginning of the month we break out and fail. So here we opened up and we were inside and we're magnetized to the stream of the month. Here we opened up and immediately we went outside and failed. And here's our new monthly low. So we're here. So when this month opens, we're inside. So the top and bottom of the range are going to be magnets because that's where all the money is. We immediately go lower and fail. So once we fail after breaking out, we now have a potential low of the month locked in. So now we're looking for counter trend days to pay continuations from. So this is a concept which might take a little bit of time to grasp, but once we do nail it, it is golden because it completely takes care of bias and gives us the most powerful signal days to actually take, like for instance here. So the month opens, we have our bias is long because we put in the low, eat back into it, and continue down. So once this month opens and we immediately go short, closing in breakout, that is a signal to buy. So everyone else is selling, or a lot of people are selling, and we're looking to buy because we have our thesis is long. So anytime we get these counter trend days, they're actually indications to us to sell. So you can see prices even back just into these. It's not supply and demand, although that's why price is coming to these areas. That's not the frame that I'm using here. It's the previous month's range. And we come back into this area, close and break out. So it's a strong bullish signal because of the monthly range. Cool. I'll leave it there, that one. See if anyone has any questions in terms of the monthly range, etc. And then yeah, and we can do another recap once the new month opens. Cool. Catch you guys soon.